The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. All right, we were going to take a look here at the DAX like we usually do. On the long-term daily, there's been a little bit of discussion about the DAX making the 707, but I'm pretty sure that it's making the 78% level up there at that 11,600. We've talked about that several times. I could be wrong, but I'll double check it during the break. But the difference between 707 and 78.6 is quite a bit. So I think we should be a little bit more, see if this is correct. That's what we want to do. All right, let's look at this DAX. As you can see here, we had that big move, as you can see, coming off that bottom on January the 2nd. We talked about that yesterday. As you can see, we've been in this little bit of a downtrend. We got all the way down to the 61% retracement around 11,005. Markets bounced a little bit, but we've had some lower tops in here. But believe me, this is a very, very narrow range for the DAX between 11,650 and 11,500. But, there is a possibility in here because we are over a really strong ending cycle, as Bill Meridian pointed out to us. He had a lot of information to suggest that, this early part of January is going to be a very, very difficult time for the market. So we want to keep this in mind. We have to pay attention to him. We've had him on for well over a year and a half now. And he, like Norm Winsky and Shane Smolian, have come out with some absolute fabulous, technical signals. So we want to pay attention, particularly with Bill, because as you remember, when we were down around $40 a barrel, he thought that oil was going to get up to 60 and or 62 or 63, and we could still do that, without any trouble. But it's all related to, the amount of money that you have to risk on something, and that's primarily what you're trying to do when you're watching these things, is to define the risk, the best you can. I've had a couple of requests from some folks in the den here to take a look at some stocks. The first one we're going to look at this morning will be Tesla, and we will put this up. We'll see here. This is what we're looking at on Tesla over the last year and a half. If you'll notice those black lines across the top, those are time frames between highs, between the June high of 2015 and the April high of 2016. It's perfectly equal to what just happened now. As you can see, that's a downtrending move. On a long-term basis, this would be the 135 pattern that Roy Longstreet likes so much. You have all the patterns and ratios coming together. Tesla's trading at around 215 right now. If it gets above 225, most probably this would be a failed pattern and we're going to go higher. But right now, Tesla is in a longer-term downtrend. And as you can see, it just about made the perfect 61% retracement back in December down at that 178 level, and then it's had this pretty good rally. So that's what we're watching Tesla. If you notice here in Tesla from the June to January period, you see some really awesome ABCD patterns in here that came in at the bottom in February of last year, and that was a bottom that we've looked at many times in the S&P and the Dow and everything else because it was such a powerful move down with the big ABCD. We went straight down from January the 4th into, the second week in February. So remember, these things can go both ways. So what goes up usually comes down, but not always in our lifetime. Now, we've asked another one that someone's asked me about was the stock of NVIDIA, and I want to bring this up to let you take a look at it. I don't know much about this stock. I guess it is a tech stock. But if you take a look at this, on the daily basis, we made the ABCD up here at the 120 level. We're now trading down near 100. This is this correction that we've had over the last 5 days is twice as much as the correction that we had during the 5 days in November. So that's telling us that there's more weakness coming into this stock than there is strength at this particular time. Now, if we go and look at it on a little bit longer time frame, and that is the weekly chart, you're going to see NVIDIA here. It's pretty straight up move. I mean, it's got to be one of the best ones for the past 6 or 7 years, because it looks like we went from about 15 to 121 about 10 times, which is a pretty good move. But you'll notice here that we had this shooting star candle, which is the most bearish of all the candles that we have. That's basically, where you have the market goes way up and then comes way down on a reversal type basis. If you remember when this was happening 2 weeks ago, we were talking about this stock because it was in the news, and we'd left two major gaps there. Well, both of those gaps have now been filled, and so that's the case of trying to be prepared when you see some of these things start to come out. By the way, I think we have to take our hats off to our future Secretary of State. Secretary of State. That's where. Oh, anyway, the Secretary of State, Mr. Rex Tillerson, is he gave up his job at Enron. Wow, Larry, you're really in bad shape today. He gave up his job at ExxonMobil to take the job as Secretary of State. So he had to leave, and I hope he's going to make ends meet, because I don't think he makes anywhere near. I think he makes about $250,000 a year. Oh wait, he did get a golden parachute for his retirement, which turned up to be a bonus, POLR. The bonus was for $185 million was his bonus. Now I don't know if he's going to be tax exempt like. What's his name was Hank Snowden. Hank Snowden had $470 million that was deferred in taxes from Goldman Sachs. So that's a huge rally. But that's politics. But we'll see how this all works out. Hopefully the world will be okay, and I believe it will. Everybody thought their world was going to come to the end when the election started and ended, but that hasn't happened. It actually has been pretty good. But let's get on with the markets. No one cares about that. Let's get on to something. Since we're talking about bull, let's just move on to the cattle market. We've had a question about the cattle market. I just wanted to bring it up to you and see. If you'll notice here, what I've done is I've just shown you the fact that April cattle went up and made the 78% retracement. These are things that I focus in the newsletter each week to try to show where certain things should be happening. We've had a nice 3-cent break in cattle since this happened. But all you do is when you're looking at these cycles, what you do is you go from low to high and low to high. And the reason why you do that is because the markets repeat over and over again. Well, they do the same thing on the downside. You look at the number of days down in the ABCD swing, and if you see that, that gives you a pretty good idea of where the bottom should come in. And then when you add the ratios to it, that forms the pattern, and that gives you an idea of where you are. But remember, it's all probability. It's not certainty. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, let's take a quick look here at the U.S. dollar. We did go up yesterday and make a slightly higher high. If you'll notice very closely here at the very top, you'll see that we hit that 1.27 ABCD number 4 times, the 4th time being yesterday. We did take out the high of the previous 3 times, and then we immediately reversed 100 pips. That's when the euro got down to the 103.70 and then quickly reversed. This could be an indication that the U.S. dollar is going to be under some resistance. However, it doesn't take much for it to explode through to the upside, and that would cause some more weakness in some of the other things. But that was enough to get gold moving, to the upside, because we've had a pretty good rally in gold after that move that we had in the dollar. We'll just look here at the gold, because we have a situation here in gold that is very similar to what we had in the crude oil, which I'll try to cover both of these together. If you'll notice here in the gold, where you see that 101 right in the middle of the chart, right under where it says gold hourly chart, that means that you took out the high of December the 15th by just $1. And then what's happened now is gold has backed off. Now, it has completed a smaller ABCD pattern, but we've got a little bit larger one up there at that 1172 level. So there's a possibility that it could, break above that. But right now, it's beginning to look exactly like what happened in crude oil yesterday. And let's just review that, because I think it's interesting, because we were talking about this, is the fact that we'll take a look at the daily crude oil. We'll just show you what it looks like. If you'll notice here where I had the notation here, this is what I put in the newsletter, is it needs to clear $55 a barrel or it can be bearish very quickly. Well, we only got to $55 a barrel, and it immediately dropped $3 a barrel yesterday. That tells us that this market has tremendous resistance at $55 a barrel. You can see the larger ABCD that's there. However, there's some smaller ABCDs that are there, and you can also see the 3 drive to a top pattern that occurred from August to October through December. And we took out that high of December by about 2 pips, I believe, and that was it, and not in every contract. So that was the first thing yesterday that was sort of suggesting that the crude oil was not acting nearly as bullish as the people on the financial press, happened to be talking about. Now, I wanted to do one other thing, and that is to take a look at it on a little bit shorter time frame, just so you can get an idea of, what you do is when you go down from a daily down to a 60-minute chart, it will give you some ideas of how some of these markets operate. Now, you'll notice if we go back to December the 12th, the night of the OPEC meeting where they had the big gap up, the market gapped from 53 to 56, and the whole world was bullish. And what happened? The market dropped about almost 10%, well, about 8%. And then it went back, and you'll notice we did take out that high by just a little bit. That 99 that you see there is not correct, I don't believe, because the option that I was looking at did take it out by about 2 pips. And as you can see from that level, that's when we really started down. The first clue was that you stayed up there for 5 hours without going, blasting through. That was a first indication that, wow, there must be somebody in there that's willing to take the other side of the long trade. So that's what's happened. Now where we are is very, very important. If you'll notice in the far right-hand corner of this chart, you're seeing the 78% retracement will come in right around $53 a barrel. Below that, it's got big trouble, because then you're going to be suggesting that it's going to make a 1.27 expansion to the downside, and that would take it down to around $49 a barrel. So these are key figures that we're watching for today. Whether they'll have much of a matter in the markets, we'll have to wait and see if that's going to be the case. Okay, we've had another request to talk about something that our good friend John Logan talked about, and that is the Dow Jones utilities. And I wanted to bring this up here and show you where we are on the long-term basis on the Dow Jones utilities. You'll notice that we made those 2 1.618 expansions up there. That was quite a while ago, about 10% ago, and then the market has broken down quite a bit. We've been in an area of really good support for the last 3 or 4 weeks, as we've mentioned many times, because that was the reason why we thought the bonds had a chance for a good rally. And in fact, they did have a very good rally in the bonds, and you can see that by looking at the chart of the daily utilities, and you can see that 1.618 up there at the top. That's that weekly that we were talking about. There were 2 numbers up there, and then you'll notice that the retracement that we made on the downside was right at a 1.27 expansion, and also a perfect 61% retracement, and we've had a very good rally. And what we've done is we've matched the other rallies that we had from September, October, and now where we are here in January. So we're at a real critical level here where we could start to move down, and that would mean that rates are going to start higher again. I believe they are going higher, but with the $64 question is, do they go higher from here, or was this all we got? Was it just a dead cat bounce in these? If we have a bad day in the notes and bonds today, in other words, if they're down substantially, then you don't want to be long that market, and you certainly want to take the profit and stand aside if you were able to buy it down there near that bottom, which was pretty apparent that 618 in the bonds and everything else was important. We'll put that bond chart up so you can see it, because the fact that they've rallied very, very little here over the past we're in the midst of a 4-week rally, just like we've shown in the utilities, and this market hasn't really done very much at all. So we're still trading at around this 150 level in the 30-year bond, and anything below 147, says, good night, and that thing will really have a big move, because this bull market has been going on for 33 years, folks. It was in 1982 when that little puppy finally turned around. It topped in 2016, so that was a 33-year bull market. That's one of the longest bull markets in recent history. We've had some big corrections during that time, but it was still, very, 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 very influential in our economy, especially with this quantitative easing that I still don't understand. And we'll move on to the next one here. Okay, let's go here to two things I want to cover. First is the Asian market, the Hong Kong market that we watch daily for our friends in Hong Kong. And as you'll notice, we had this move where we went down, made a perfect ABCD right at a 1.27 expansion. We stayed there exactly at the 21,500 level 2 days in a row at the end of the year, and now we've had a rally, and the market has actually gone to 22,150 yesterday and today, so it's actually rallied a little bit more. We should have some resistance up around the 22,400 level. Now, another one that's interesting because it is breaking out above the 78% level, and that is this Nikkei Dow. And this Nikkei Dow is very, very heavily influenced by the Japanese government because they're doing all the buying. But that's neither here nor there because we have taken that high out. So not by much, but enough to say that it is, you'd have to say that it is a failure because we got to 19,700. So we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look now at the heating oil. I wanted to mention that because it was doing the same thing that that we were looking at in the crude oil, where it went up to that 1.618 level, finished the ABCD pattern exactly, and from that level, it's had a pretty big move to the downside. It dropped from 176. It dropped almost 10 cents in heating oil, which is a lot of money in one day. So that was another reason why crude oil looked like it was doing the same thing. We're seeing that same pattern in gold, folks. As long as we don't get above 1168, then gold still has a bias to the downside. And it's not getting any help from the dollar today because the dollar is weakening a little bit, which that could also be a reason why gold should be going a lot higher, but it isn't real early in the morning as of yet. So that's one of the main things. Now, I wanted to switch over to the currencies for just a second because I wanted to point out, what we were looking at here over the weekend here in the Australian dollar versus the U.S. dollar. Many of these cross rates have fabulous patterns that line up to the ratios just really, beautifully. And if you'll notice here in the Australian dollar, we went down to this 1.618 level at 171.70 for 4 days in a row. That suggested that we were most probably getting ready, to rally at least about 150 pips from where that bottom came in. And as you can see here, we can put this up here to let you take a look at it. What's happening so far is we're almost at that level right now. We'll just bring this up so you can take a quick look at it. And this market's in a strong downtrend, but we are coming into an area. And the old lows there that we had back in November, they're at the 73.20 level. That's going to be an area where you're going to be really strong resistance, I would think, in the Australian dollar versus the U.S. dollar. So those are just a few of the things that we look at when we're watching the cross rates, because old lows and old highs tend to act like magnets, and that's why you see these technical pictures on these charts. They look so similar that it's truly amazing. This is the work from Dr. Andrew Lowe when he wrote his book, The Non-Random Walk Down Wall Street, when he went back and statistically looked about these things to see how they actually worked, and we'll see what's going to be happening with those particular cross rates. But they are beautiful. So we'll see what they look like. Okay, well, we're starting the market strong as usual. We're got up here to we did take out the high of the previous days, which is what we expected. We shouldn't get much above 2263 in the S&P, folks. That would be the area that I would be looking at for potential entry to see what's going on. By the way, if you want to see something funny, folks, you've got to Google this. I'll have the picture for you tomorrow. But there's a rooster sculpture outside of a shopping mall in China. It was off from December the 24th, and it's a rooster. This is the year of the rooster for the Chinese New Year, and the rooster is sculptured like Donald Trump. It's got Trump's hair. It's got his little, how he uses his fingers when he speaks, and you just have to see it to believe it. But it is really, really cute, and it is big. Let me think. I think it must be 50 feet high. So take a look at it. I don't know if it's going to get any news play or not, but it'll be interesting, to watch this, watch how this unfolds. But it is rather unusual to see a sculpture, that big. I don't know. There's rumor that they're already sculpturing there on Mount Rushmore, there in South Dakota. That this is what's going. Oops, that's North Dakota, isn't it? Gosh, I keep remembering. No, it's South Dakota. Sorry about that. I've been there. I can't remember. That's because Rich is from South Dakota. Anyway, let's. Well, no, we didn't. Oh, there it is. There, you've got it in there. Thank you very much, Gator. That's great. That's great. That'll give you an idea, of what it looks like. You guys pick up everything in this den. That's one of the advantages of, coming into the Tiger Den. You got so many smart people that, publish some great articles that makes it, really, really cool to look at. So let's get back to these markets here for a little bit. It's going to be interesting to see if we can hold the ratio here with the euro, because this 103 has been hit 3 times now, folks. That's telling us that the U.S. dollar could be having some trouble at this level. So we want to be watching it very, very closely and see if that is, in fact, going to be the case. And that's really what you have to do. You have to look at it day by day because it is so volatile. But that U.S. dollar taking out that high at that 103.60 and then reversing by 100 pips is not an easy thing to do. That takes really serious money, and whether that's going to turn or not, we'll have to, let the markets decide if that's going, that's going to be the case or not. If you hold on one second, one of my limits just went off, and I wanted to see what it is, because I want to see if it's a trade setup or it's just telling me what's happening, and it is nothing. I'm sorry, just a retracement level. And that's nothing big, so we'll watch this to see what's going to happen. Okay, we hit our 22.63 level. Let's just see if that's going to mean anything or not, but we'll watch it very, very closely. Remember, the first half hour is usually amateur hour, but that's usually neither here nor there. Folks, when you do these patterns and stuff, the only way you're going to be able to, when I do it, it looks real easy, and, sometimes it is. But, you got to prove it to yourself. That's the bottom line. Until you really prove it to yourself and can see that these things actually do fit together sometimes. And believe me, they don't fit together all the time. If you can fit them together about 2/3 of the time, 66% of the time, that's a pretty good batting average, if you can do that. And that's the main thing that you want to be looking at. And the other thing is you always got to be ready to take profits in your trades. Don't always try to, to swing from the fences. If you remember, Pete Rose was the first player to get $100,000 for only hitting singles. And he made a whole lifetime of, great baseball with the exception of his betting practices. But that's neither here nor there. Okay, that would be one thing that would be on my wish list, is that Pete Rose gets into the Hall of Fame. I think that's a travesty that he's not put into the Hall of Fame, but they don't ask me these things anymore. So we will take a look here what we have going on. One other thing I wanted to mention is that when you're trading things like cross rates in currencies, if you're long the Australian dollar and you're long the Canadian dollar, basically that double shorts you the U.S. dollar. So you don't want to overexpose yourself with margin, because that is what you're doing, is you're making it very, very critical to tell yourself that it's you're over leveraging, and you don't want to do that. That's not a good thing to really do. The other thing is when you're trading, if you don't risk any more than 2% of what your trading capital is, like if you've got $100,000, you don't risk more than $2,000 on any trade. That means you'd have to be wrong 50 times in a row. I mean, you have to work pretty hard to do that. But that's neither here nor there. So anyway, we'll keep an eye on some of these things, and we'll get moving on here. If you want to call in, it's 877-927-6648. I've had a request to talk about 2 different things here. The first one is going to be Amazon, and then we'll move on to there's Amazon. As you can see, Amazon has been hit a little bit here. We had a little bit of a bounce yesterday, and now we're backing off. We'll be right back. 877-927-6648 with the IWM, the Russell 2000.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives.
If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks. Well, I posted the picture of the sculpture that's in China of the Year of the Rooster, and as you can see, it is a mock-up of looks like our president-elect. I don't know if it's something good or something bad, but it's a sculpture. It's not a balloon. This took some serious work, and you can see how high it is. It's got to be 50, 60 feet high because you can see the people walking around it. And so it's a really big thing. I don't know what's going to happen with it, but we'll see. There's probably more politics than the other stuff that we see going on in the world, but hopefully it's just something else. Okay. All righty. Oh, by the way, don't forget that there'll be a holiday in the United States on January the 8th. That's the King's birthday, Elvis Aaron Presley. We always take that day off. So make sure you tell your boss that you don't have to work on that day. Very, very important. You don't want to do that. All right, we've got another thing to look at, and this is the IWM. This is going to be real interesting today because well, give me a second here. We'll post this up here. This is this thing that we're watching. This is the 4-hour chart going back over the last 3 or 4 weeks. As you can see, it has this 135 pattern in the IWM. So watch it very, very closely. This is one of the more highly profitable patterns as far as probability because it works about 70% of the time. Very similar to what we get with Gartleys and butterflies and the ABCDs. So it's got a lot of things going for it. You've certainly got a good place to put your stop because if you get above the 139 level, this would certainly be wrong. That means you would be making new highs. And we'll see if that is going to be, going on as we see some of these things move along. Okay, now I've had one other question to take a look at the stock of the IBB. This is one that has been following the market down. I mean, this thing has not had any bounce at all. You can see the bounce that we had at the election. You can see that we had the big bounce. Again, you can see the really nice 135 pattern there where the 0.5 is a 78% retracement of the move in 0.3, and the market has been basically, going lower. This has been the leader, folks. This was the one that started up back in March of 2009. This is the one that started the big bull market. It was the first index to really take off, and it went the farthest. And of course, we've gone from 400 level down to the 230 level, and so the biotech index has been under a great deal of pressure. Now, this is something we want to watch, because if this thing does turn, this will be a really good buying opportunity here in the biotech index, if in fact this is some type of a top in the market, like we're seeing some indications of it, but it's still pretty easy. We're going to have Andrew, we're going to have a special next week on when the Chinese New Year comes up. It's not quite Chinese New Year yet in China, but we're going to talk about the year of the rooster, because these 12 signs that they have are really they're really amazing how they work. So if you ever check your sign of what you're looking at, it would be really be interesting to see how some of these things hold up. We'll just watch it as we go through the process of listening to Chi Stay on TFNN. It's not easy to do this program, by the way, because we are looking at a situation where I try to come up with something different and give a few trading ideas. Some of them work, some of them don't. But, at least it gives feedback on, what people are doing. We got some great people on TFNN that give some fabulous information. You can, it's unbelievable. You go with John Logan, Basil Chapman, Steve Rhodes, David White, Andy Heck, the people at Tiger Financial, and, of course, the tandem team of Rocky and Bullwinkle. Oh, excuse me, I mean Little Tom and Big Tom. So these guys do fabulous work. So it's one of the better venues for getting information than you'll find. Believe me, at TFNN, the folks in there really cover what's going on in the world. If you want a question, you just type into the den and somebody will have an answer for you post haste. It'll be very, very quickly. Now, the gold is still starting to back off here quite a bit, because we're down about, $7 or $8. Well, only down about $6 from the high, but it's telling us that level of 1168 was, in fact, something very, very important. And if we look at that in conjunction with what happened in the crude oil yesterday, they look almost identical. I mean, they go up and take out the highs of several weeks ago, right at a 1.618 expansion, and then roll over. And that's the kind of thing that you want to watch as you're following through here. Now, we've had a question about the euro. We got down as low as 103.40 level yesterday. That is when the dollar was making that big move. All we were doing at that time is we were taking out the high from the low from December the 28th. And all we're doing now is we're making a 78% retracement of the high from yesterday. So all of this is still in a downtrend. We need to get the euro above 106. That's 150 pips from where we are now to really get it moving and saying, yes, there's been a pretty big change here in the dollar. So this is still very, very early. But there is a potential here because of what happened in that U.S. dollar index. To go up there and take it out by 4 days in a row and then reverse, that's very, very important, especially with the currencies, because they have a tendency to make significant bottoms in the first week of the year. And that's due to what happens in London, because that's the heart of the Forex market. And, of course, we're the second place there, and then in third place would be Asia. But that's neither here nor there. We'll just move on to the next one. We have another question here about another stock, and that is, give me 1 second, and I'll get it up here for you. It is, I think I have it here. Oh, dear, maybe I don't. Nope, I've lost it. Cannot find it. All right, let's take a look here at this Dow Jones. That's what I want to look at. Today we got to 19,950 so far. If we get this up and take a look at it, that's just, the 20,000. We might make it. I don't know. As you remember, we had Bill Meridian on yesterday. He said there was still the chance we might make a slightly higher high in the first week in January, and if that happens, we certainly could get it. But we do have some negativity in here based on the inverted Bradley model, and it's set up to do it. Whether it does it or not, that remains to be seen. But you got all the patterns are there, one after another. I mean, they're just unbelievable how they all line up together. It's just a question of whether they're going to work or not. Because when they all fail together, wow, that means you're looking at a move that's going to be, really, really big. And I'm telling you from past history that I can say with a great deal of confidence that's what happens. If we look at the New York Stock Exchange Index here, you'll notice this is we've only made a 61% retracement back on that index so far, but you'll notice that we have a double top, we have an ABCD pattern, we have a 3-drive pattern. All of that's coming together at the same time, and this is the real market, folks. This isn't the Dow, which is 30 stocks, or the weighted stocks in the Dow Jones, or the only the cap-weighted stocks that we have in the NASDAQ, and also the S&P. So those are ones that we want to watch, quite closely. And I want to bring this up on a shorter term basis. I want to show you what's happening with the New York Stock Exchange Index, because it will take a little bit of thunder out of the bulls, because you'll notice here yesterday we made a 61% retracement up here at 11,184. And we'll be right back, 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got a good question about the Bradley model and when it inverts. When we first started looking at this model back in the 1986, 87, when we started writing that book, Astrocycles, A Trader's Viewpoint, Dr. Miller pointed out the Bradley model to me, the Bradley book, and so we went back and tested it from 1875, and it has a really good correlation with trends in the market. It also has a really good, dates where the market will turn. The problem is it inverts. Now, the question that Bill asked is when do you know when it inverts or not? Well, all I do is I look at the patterns, and if I match a pattern to what I think is a Bradley date, then I will expect an inversion. However, Norm Winsky has done a lot of work with the Bradley model, and he's noticed that when you have a planetary retrograde occurring, that is usually when an inversion will occur. And we just had one of those this past week. So it's very, very important that could be what's causing this if, in fact, it is inverting. And as of yet, we don't know, but that's what we think is happening. So that's one of the things we look at. So the two things that I watch are whether there's a retrograde motion of a planet at that time, or if there's some major cycle things coming together. We had this happen in 2009. If you remember, that was the bottom of all bottoms, March the 5th of 2009. There was everything in the world there that said it was the bottom. I mean, it was so clear, and you couldn't get anybody to buy it. And but anyway, this is what we're trying to see with the Bradley. And it's just a guideline, folks. Believe me, when it works, it looks like it's magic. But again, it's only right about 65% of the time. But it does do a good job with the trading dates, when a trend turn is going to occur. And it does pretty good with the shorter term trends from 3 to 6 weeks. That has a tendency, the market, to be pulled in that direction. But it's just basically a guideline of what you're looking at when you're watching these things unfold. Primarily, it's all pattern recognition. To start out with, you use the ratios of the Fibonacci summation sequence first, then you match the patterns to it. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.